Hello, prospective clients. My name is Jayesh Patel, and I will be discussing some very important economic elements in South Africa today. As possible investors, we will try to go through all the key elements. South Africa has had many changes to economic system over the past 2 decades. In the 80s to 90s, the economy was based more on a command system. As the political climate has changed, it's currently a mixed economy, but there are still some major industry controlled by government like oil. South Africa is one of the largest, strongest economies in Africa today. Gold has become the highest exporting material, followed by diamonds. The rest of exports, platinum, coal, iron, have overtaken previous agricultural exports. Imports have also increased, yet there currently is a trade deficit of about $3 billion. Majority of the imports into South Africa are crude and refined petroleum. One of the major changes over the past 30 to 40 years has been trade between South Africa and developing countries like China, India, and Japan. These developing Asian countries account for the majority of import-export trade with South Africa. In the 1965s, Europe and U.S. were the leading traders. Economic growth, measured by annual GDP, has shown very little progress over the past 2 to 3 years. In the early 2000s, South Africa was seeing large growth in the area of 5% in 2005, but took a huge drop during the economic crisis of 2008. There was a rebound, but over the past couple of years, growth has slowed due to global downturn, increased political turmoil, inflation, and weak currency. GDP growth is only 1.26 in 2015. GDP total of South Africa is only $314 billion versus 18 trillion in the U.S. As the graph of the GNI per capita PP shows, that there's been a steady disparity between South Africa and the U.S. over the past 25 years. The data shows that South Africa has become more expensive compared to the U.S. The PP factor is around 5.5 in 2015. The Human Development Index is an important criteria for economic development. A score of 1 shows high economic development. South Africa has a score of 0.66 versus the U.S., which has a 0.915. There are many factors that make up the score. As we can see from the table, South Africa falls short compared to the U.S. on many aspects, like life expectancy. There's a difference of over 20 years. One of the reasons of low life expectancy is the high homicide rate and crime rate in South Africa today. One of the negative signs of economic growth is high unemployment rates. In South Africa, it's 25.1%, and there has been no signs of improvement. Well, how has this affected foreign investment in South Africa, as well as investment out of the country? If we look at net outflow of FDI, we see that over past 4 to 5 years, there has been a significant movement of money and investment out of South Africa. It appears similar to outflow in the United States. Many companies are looking outside of South Africa due to government instability, and many developing countries are providing incentives, including tax rates, to move their businesses out of South Africa into their countries. Net inflow of FDI in South Africa has significantly slowed in the past 2 years. It was a nice investment into the country from 2007 to 2013, but has seen a sharp decrease in 2015. Many point again to political instability as a key factor. This short video explains the economic.
South Africa recently avoided a downgrade to so-called junk status by the ratings agency Standard & Poor's, which cited its slow economic growth as a major area of concern. Most feel the economy has bottomed out, but the recovery will be slow.
Business confidence surveys are telling us that the majority of survey respondents, in other words, firms in South Africa, are not confident. And when you drill down into what their main bugbears are, the biggest constraint to business, we are told, is the untidiness of our domestic political arrangements.